Welcome, curious minds. We're about to take a deep dive into some fresh financial data that just landed.
That's right.
You've brought us the latest quarterly results for Oriental Hotels Ltd, specifically their Q1 FY26 performance. That's the quarter ending June 30, 2025.
Yep. Hot off the press.
Our mission today really is to unpack these sources we have. There's a press release and then the detailed unaudited financial statements, along with their audit reports. We're going to try and pull out the most important insights, give you some maybe surprising facts, and help you understand what this all means for Oriental hotels and, well, the broader hospitality sector, too.
Yeah, think of it as your shortcut.
Exactly, your shortcut to getting up to speed.
And it's great when we have both, isn't it? The company's sort of official announcement and then the really granular financial table. Because it lets us not just see the headlines, but, dig into the actual numbers, backing them up, understand the context.
So the immediate question is, what story are these documents telling us about how the company's been doing lately?
What's the narrative here exactly?
Yeah.
And what's driving it?
Okay, let's unpack this then. The big news from the press release is definitely those top-line figures. Oriental Hotels Limited, OHL we can call them.
Sure.
They reported revenue of INR 107 crores for this Q1 FY26.
That's a pretty robust number.
Yeah.
And if we connect this to the bigger picture, that's actually a significant 26% increase over the same quarter last year, Q1 FY25.
26%, wow.
Yeah. And the managing director and CEO, Mr. Pramod Ranjan, he attributed this growth to, well, two key things, really.
Okay.
The completion of significant asset upgradations,
Mm-hmm.
so they've been investing in their properties, and also sustained demand momentum.
So it suggests their strategy, the investment part, is actually paying off now. It's not just the market lifting all boats.
Exactly. It suggests they're maybe capturing the more premium slice of that returning demand because of those upgrades.
And the profitability, how does that look? Because revenue is one thing.
Right. Looks equally compelling, actually. The press release highlights an EBIT of INR 25.4 crores and a profit after tax, or PAT, of INR 8.7 crores for the quarter.
8.7 crores PAT. And if we dig into the detailed, unaudited standalone financial results, do those back it up?
They do, and they give us even more color.
No.
So for Q1 FY26, the standalone revenue from operations was, INR 406.95 crores, basically 107.
Right.
And the profit for the period, the PEAT, was INR 8.71 crores, just slightly higher than the release headline figure, but essentially the same.
Okay.
Now, compare that to Q1 FY25. Back then, standalone revenue was INR 81.36 crores,
Mm-hmm.
and the profit was just INR 3.64 crores.
Oh, wow. So less than half the profit on about 80% of the revenue? That's a big jump in margin.
It really shows that growth trajectory, strong operational leverage, like you said.
And the earnings per share, the EPS, that must have jumped too.
It did. It went from INR 0.20, 20 pays in Q1 FY25
Yeah.
to INR 0.49 in Q1 FY26.
Nearly 2.5 times higher. What does that kind of EPS jump tell you beyond just the headline numbers?
Well, that jump in earnings per share, it's a very healthy sign. Good for investor confidence, obviously.
Sure.
It really shows that the revenue growth isn't just, covering higher costs or something. It's significantly improving the actual bottom line available to the shareholders.
Right.
Suggests efficient management, maybe better pricing power too. More of each new rupee is turning into profit. That's what you want to see.
Okay, that makes sense. Now, here's something else that gets really interesting. The company's association with a major brand.
Ah, yes.
The press release makes a point of saying IHCL's iconic brand, Taj, is ranked as India's strongest brand 2025 and world's strongest hotel brand 2025 by Brand Finance UK.
Pretty impressive accolades.
And OHL has 3 Taj-branded hotels in its portfolio. So what does having 3 hotels under such a, well, globally recognized strong brand actually mean for OHL, for its market position, its financials?
Yeah, this association with Taj, it's definitely not just about, looking good.
Right.
It translates directly into tangible benefits. Things like higher average daily rates, the ADRs,
Mm-hmm.
and probably stronger occupancy rates too, even maybe in shoulder seasons or off-peak times.
Because people trust the brand.
Exactly. Guests often prioritize known premium brands, especially post-pandemic perhaps, and that gives OHL significant pricing power. It builds a sort of strategic moat against, say, smaller, unbranded competitors.
Secures that premium slice of demand we talked about.
Precisely.
Okay, now beyond the financials, they also mentioned something about environmental stewardship. Under IHCL's ESG Plus framework, Pathia,
Right, Pathia.
OHL Hotels' renewable energy consumption stood at 61%. That seems quite high.
61% is definitely notable. And this focus on sustainability, it's quite insightful. It's not just, good PR anymore.
You think it helps the bottom line, too?
Often, yes. It can lead to long-term operational savings, less reliance on volatile fossil fuel prices, for example.
Okay.
Plus, it definitely appeals to a growing number of environmentally conscious travelers and, importantly, investors. It can boost brand loyalty, maybe even attract different kinds of capital.
So it shows companies are thinking beyond just the P&L sheet.
They have to. Increasingly, it's part of the whole picture now.
And just for context, for anyone wondering about OHL's actual footprint, the company is an associate of the Indian Hotels Company Limited, IHCL.
Yeah.
And it operates 7 hotels. We mentioned the Taj connection. So there's the Taj Coromandel in Chennai, Taj Fisherman's Cove Resort and Spa, also in Chennai, Taj Malabar Resort and Spa in Cochin.
Key properties.
And then also Vivanta Coimbatore, Vivanta Mangalore, Gateway Madurai, and Gateway Cooner. So a decent spread, mainly in the south.
Yeah, a solid portfolio leveraging those strong IHCL brands, especially Taj.
But look, numbers, no matter how impressive they seem, they're only as good as the trust we can place in them, right?
Absolutely.
Yeah.
Which brings us neatly to our second source.
Exactly. That outcome of meeting of the board of directors document, it gives us some crucial insights into how these figures were, well, validated.
Right. This second document, it provides that critical detail that you don't always get just from the press release headline. It confirms the board meeting actually happened on July 16th, 2025. Ran from 3:15 p.m. to 3:50 p.m. Quite specific.
Quick meeting.
Seems efficient. But crucially, they officially considered and took on record both the unaudited standalone and consolidated financial results.
So this isn't just management saying things look good. There's a formal process. What does that mean for you, the listener, in terms of credibility?
Well, it means these results have gone through a proper, rigorous review process.
Okay.
The notes, if you dig into the actual financial statements, they confirm the standalone results were reviewed by the audit committee,
Right.
then approved by the full board of directors, and then also reviewed by the statutory auditors.
And the consolidated results, same deal.
Similar, equally thorough process for the consolidated ones, too. Which actually brings up an interesting distinction, the difference between standalone and consolidated results.
Yes.
Yeah.
Because they weren't quite identical.
Exactly. The consolidated figures for Q1 FY26, they actually show slightly higher revenue from operations INR 107.65 crores compared to 106.95 standalone.
Okay, tiny bit higher.
And a slightly higher profit for the period, too. INR 9.25 crores consolidated versus 8.71 standalone.
So why the difference? Why do we see that slight bump in the consolidated numbers?
Good question. The consolidated results, they basically give you the picture of the entire group structure, not just the main OHL company.
Right.
They incorporate the performance of OHL's subsidiary, that's OHL International HK Limited,
Okay, the Hong Kong entity.
a joint venture called TL Hotels and Resorts Limited, and also 2 associate companies, Taj Madurai Limited and Lanka Island Resorts Limited.
So it's rolling up the performance of all those related entities.
Precisely. So the consolidated report, it paints that broader, more comprehensive financial picture of the whole business ecosystem OHL is part of.
Got it. Now, the auditor's review report, it specifically mentions how they handled these consolidated figures. What should we take away from the fact that they relied on other auditors' reports for some of these entities and even management certification for one Indian associate? Does that matter?
Yeah, that's actually a crucial detail for, savvy investors or analysts looking closely. This reliance on other auditors for subsidiaries and JVs, and even using management certification for an associate, they note it wasn't material to the group, which is important. It's pretty standard practice for large, complex groups like OHL. It's unavoidable sometimes.
Right.
But it is always something to be aware of. It means the consolidated picture is built from these different layers of financial data and review processes.
So understanding that layered audit approach is key.
It is. It's key to assessing the overall financial health properly and understanding the nuances of how the group's operations fit together. It just highlights the complexity you get in these large corporate financials. Scrutiny is always important.
Okay. So wrapping this deep dive up, Oriental Hotels Q1 FY26, we're seeing a picture of, well, really robust growth, wouldn't you say?
Definitely robust.
Significant profit increases, actually outpacing that revenue growth.
Yeah, the leverage point again.
Powerful brand association, clearly, with Taj. And this is all underpinned by those strategic investments in assets and interestingly, that notable commitment to renewable energy.
Yeah, I think these results, they reflect not just OHL's individual performance, strong as it is, but they also potentially signal a broader, quite strong resurgence in the hospitality sector, driven by that sustained demand they mentioned.
Right.
And OHL's focus on upgrading assets and really leaning into that brand strength, it clearly positioned them not just to ride the wave, but to actually, well, thrive in this current environment.
It seems like a strategic playbook that's yielding very clear results right now.
It certainly looks that way from these Q1 numbers.
So, thinking about all this, what stands out most to you from these numbers and the strategic choices OHL is making? As you consider this approach, continuously upgrading assets, leveraging a powerhouse brand like Taj, how do you think this positions them, not just for the next quarter, but maybe for navigating future, I don't know, economic shifts or even unexpected changes in global travel patterns down the line?